Hello friends, how are you? I hope all of you are doing really good. So we are going to start with our first segment, and our first chapter is material costing. Our first chapter is material costing that we are going to start with, and make sure that we are not going to discuss any of the concepts in it, right? Whatever the questions are, we will talk about the questions, we'll talk about the concepts which are used in the question, we'll talk about the technical points here, we will talk about the important points that you need to remember, right? So all these things we are going to discuss in this series. Okay, so we are going to start with our first segment, that is material costing. This is your ICAI module, the old course. Okay, so we are starting with our illustration number 1 on material costing. Calculate economic order quantity from the following information. Also state the number of orders to be placed in a year. The information that is given is consumption of material per annum is given 10,000 kg. The order placing cost per order is rupees 50. Cost per kg of raw material is rupees 2, and the storage cost is given to you 8% of average inventory. Now, the first most important point that you need to remember is whenever we are talking about the consumption, we are talking about the per annum consumption, right? So we are always talking about annual consumption. If in question you are given the half yearly consumption, you are given monthly consumption, you are given quarterly consumption, you have to convert it to annual consumption. Clear? This is the first foremost rule that you need to remember. Then is the ordering cost per order, that is pretty simple. Then cost per kg of the raw material is given, then storage cost 8% on average inventory. This storage cost is nothing but your carrying cost. And the important point regarding carrying cost that you need to remember is that this carrying cost is per unit per annum. Right? So you have to take it. It is quite a possibility that you are given 2% quarterly. Here it is given 8%. If nothing is mentioned, it is always per annum. But there is a possibility that they might give you 2% per quarter. 2% per unit per quarter. So you have to convert it into annual. That is, it should be per annum. We always write it as carrying cost per unit per annum. Clear? Any doubts in this thing? Right. So simple, sir. You have to calculate simply the EOQ, that is 2 into A into O divided by C. Right? No doubts in it. A is 10,000 kg, O is the 50, and C is 8% of rupees 2, that is 0.16. So you will get the EOQ of 2500 kg. That means you should be placing an order of 2500 kg at one time. Right? In one order, your quantity should be 2500 kg. Now, the second part of the question says you have to calculate that how many orders you need to place. Right? How many orders you need to place? So, 2500 kg in one order. And in the whole year, how much of the quantity that you require? You require 10,000. So, for 10,000 units, what will be the number of orders? That is 1 divided by 2500 multiplied by 10,000, that is total annual consumption divided by EOQ. Right? So in a year, you will place 4 orders of 2,500 each, so that in total in a year you get 10,000 kg. Clear, sir? I hope this much is clear. So this was illustration number 1. Let's move on to quickly illustration number 2. So the sum of the parts will be very simple, right? And what I am assuming here is that you have gone through the conceptual lectures, right? All the conceptual lectures are available on YouTube. As you all know, all the concept lectures are available free of cost in Hindi, in English, in every language, in every language means in both Hindi and English it is available, so that the people from all over India are able to understand it. Now, moving on to illustration number 2. The average annual consumption of the material is 18,250 units at a price of 36.50 per unit. So this is the price of the material, per unit price of material that is given to you. The storage cost is 20% on an average inventory, and the cost of placing an order is 50. How much quantity is to be purchased at a time? That means he is asking us to calculate EOQ. So very simple. Annual consumption is given, that is 18,250. This is your ordering cost, and your carrying cost is 20% of 36.50. Simple, straightforward question. No hassles, no issue. So 500 units is your EOQ. So these are some of the most simple questions, I will say. Let's move on to illustration number 3, that is inventory levels. The components A and B are used as follows. The normal usage is given 300 units per week each. Now this normal usage is nothing but this is your average usage. Average usage and normal usage, they mean one and the same thing. Clear? Maximum usage is 450 units per week each and the minimum is 150. Reorder quantity is given. For A, it is 2400 units and for B, it is 3600 units. Reorder period, that is the lead time, right? This reorder period is what? This is your lead time, we call it. That whenever you are placing an order, in how many days you are expecting to receive your order. For A, it is 4 to 6 weeks. So 4 is the minimum lead time, right? And 6 is the maximum lead time. So if you are required to calculate the average lead time, you can calculate. What will be the average lead time? For A, it will be minimum plus maximum divided by 2. That is 10 divided by 2, 5. Right? For B, it is going to be 2 plus 4 divided by 2. That is 6 divided by 2, 3. Clear? So you are given the minimum lead time and the maximum lead time. This is minimum lead time. This is maximum lead time. Now he says calculate. So there are two components. You have to calculate separately for both the components. For A also and for B also. You need to calculate the reorder level. Right? So at which level you have to place the fresh order. Right? So it is maximum consumption into maximum lead time. So maximum consumption for A is given as 450 and what is the maximum lead time? That is 6. Right? Similarly for B you can calculate 450 multiplied by 4. Now minimum level, what is minimum level? Reorder level minus normal consumption into normal reorder period. Whenever we are talking about normal, it is average. It is one and the same thing whether you call it normal or whether you call it average, right? So reorder level we have just calculated as 27 and 1800. Normal consumption is given to you 300. Normal lead time we have just calculated 5 and 3. So 300 multiplied by 5, 300 multiplied by 3. Clear? So maximum level. This is done. This is done. Maximum level. What is maximum level? It is reorder level plus whatever the quantity you have ordered. Reorder level is at which level you have placed an order. Reorder quantity is what is the quantity that you have ordered. At 2700 units, we have placed this order for 2400 units minus the minimum consumption into minimum reorder period. So everything is given, reorder level calculated, reorder quantity is given to you, right? Minimum usage is given to you and the minimum lead time is given to you. No issues? Then average stock level. Average stock level is either minimum level plus maximum level divided by 2 or it is minimum level plus half of reorder quantity. So you can calculate it by both the ways and the answer will be different by both the ways. There is nothing to worry about it. Sir, in the examination, what we should be doing, you can apply any of the methods, right? If maximum and minimum levels are not available, then you can do it by this method. As simple as that, right? Minimum level, you have just calculated. Maximum level, you have calculated, divided by 2. Clear? So in the examination, one thing, it will depend upon the information that is available. If the information is available for both the formulas, then you can apply any of the formulas. That is absolutely your choice, right? The examiner will not say that you have applied one formula and you have not applied another formula. No, they are not going to say that. Clear? So this was question number 3 for us. That is reorder levels, inventory level, sorry. Illustration number 4. Compute the inventory turnover ratio from the following. Opening stock is given, closing stock is given, and material consumption is given 78,000. So how do you calculate inventory turnover? That is value of material consumed divided by average stock. So how can you calculate? Average stock you can calculate from here. Average stock is equal to opening plus closing divided by 2. Opening is given, closing is given, divided by 2. 13,000 is the average stock. So inventory turnover ratio is 6 times. Pretty simple, isn't it? There is nothing much in this. Now we are moving on to illustration number 5, which is somewhat a good illustration, I would say. Right? Let's start with it. He says, prepare a statement showing the pricing of the issues on the basis of simple average and weighted average method from the following information pertaining to particular material D. Right? So the data is given for 2016 March. On 1st of March, purchased 100 units at rupees 10 each, right? So this is the purchase. Is there any opening stock given to you? No, sir. So we are first going to start with the simple average method, and this is the format, the best format for which you have to prepare it, right? And one thing that you can add is when you're talking about the balance, here you can add one column, that is price or rate. It is always better. It is always better to create one column, although the CMA Institute doesn't, in most of the questions is not considering this price or rate column, but I will suggest you can prepare, right? That will give you the more clarity. That is, in fact, a better one. In LIFO-FIFO method, they are preparing the price or the rate method. In simple average or the weighted average method, actually they are not required, but yes, it should be done. As a practice, it should be done. Clear? Okay, so the first transaction is that they have purchased 100 units at rupees 10 each, right? So 100 units, price is 10, total value 1000, no issue. Then is purchased 200 units at 10.2 each. Simple, 200 units at 10.2, value 2040, right? So here is the balance, 100,000, right? On 300 units, the balance is total 3040, right? So the balance is 3040. You can write it straight away. And if you want to price column, that is 3040 divided by 300, that comes to 10.13. It is 10.13, right? The rate will change. But what we have done is how we have calculated the value. Simple, sir, 1000 plus 2040. So if you take the average value, it will come to 10.13. Okay. Now, on March 5, what has happened? They have issued 250 units to job X, wide MRN number 12. Now they have issued 250 units, right? How to calculate the simple average rate? The simple average rate, he says, for 5th of March is 10 plus 10.2 divided by the number of values, that is 2. That is simple average. We are not going to consider the quantity here. Why? Because if we consider the quantity, then we are applying the weighted average method. But here we are not saying the weighted average. Weighted average itself says you are adding the weight. Weight means quantity. Here you don't have to consider the quantity. You only have to take the average rate. Clear? So that comes to 10.10. So what is the value that is there? 10.10. What is the total value? 250 multiplied by 10.1. That is 2525. Now what is the value left? What is the value left? This value 550. Now 50 units are left. One thing is clear. Out of 300 units, out of these 300 units, you have issued 250 units. And what is left? 50 is left. And how this value is calculated? That is 3040 minus 2525. Clear? 515 is the value. So if you talk about rate, 515 divided by 50, that will be 10.3. The price here will be 10.3. Clear? Now, next, what happened? On 5th of March, they have issued. On 7th of March, they have purchased 200 units at 10.50 each, right? So on 7, they have purchased 200 units at 10.5. The value is considered. And what is the closing value? 50 plus 200, 250 units, and 515 plus 2100, 2615. Total value, right? And this will come to 2615 divided by 250. The value will be 10.46. 10.46 if you are preparing the price or the rate column. Okay. Now, next is on 7th we are done. On 10th we say purchased 300 units at the rate of 10.80, right? So the next is 300 units at 10.8, total value 3240. Now 250 plus 300, 550 units. And what is the value? 2615 plus 3240. 2615 plus further purchase, that is 3240, that comes to 5855. And what will be the per unit rate? 5855 divided by 550, that will be 10.65. 10.65, right? Now, the next one. What happens next is on March 13, they have issued 200 units to job Y, wide MRN number 15. Now they have issued 200 units, right? Issued 200 units. Now, how to calculate the rate? See, when we issued 250 units here, one thing is sure, we have consumed this 100. So when we are calculating the simple average, we are incorporating the FIFO here also. What? Not in terms of rate, but in terms of quantity, that the quantity which is received earlier, we will issue that first. So this 100 is exhausted. So what is left? The remaining 150 is used from here. So from here 200 minus 50, 50 is left. Clear? 50 is left. Now when we are issuing there here 200, so we have three rates. One, these 50 units at 10.2 considered, plus 10.5 plus 10.8. So practically we have three quantities which are available. That means we have three rates which are available, right? 10.2, 10.5, 10.8 divided by 3, that is the number of rates. So it is 10.5, right? So this is how you will get the rate. Any doubts? Clear? So the remaining quantity is how much? What is the remaining quantity, sir? This is the value and the remaining quantity is 350. Out of 550 units, you have issued 200. So the remaining is 350 and this is the value. This value is 5855. That is the balance value on the previous date minus the issue value, that is 2100. Right? Now, next, on March 18, you have issued again 200 units to job Z, wide MR number 17. Now you have issued 200 units again. Now what will happen, sir? Sir, this 50 is exhausted. This is over, right? Now, out of this, 50 are left. 150 is already issued, right? And here 300 is left. So that means you have two rates, 10.5 and 10.8. So 10.5, 10.8 divided by 2, 10.65 is the value. You have issued 200 units. Now with this issue, this 50 will also be exhausted. What is left is? What is left? 150 units are left, right? And what is the price? Price here is 3755 minus 2130. Clear? Then on March 20th, they have purchased 100 units at rupees 11 each. Now you will record this 100 units at 11 rupees, 1100. So what is the final value? That is 150 plus 100, 250 units. And 1625 plus 1100 will be the value. Now on March 25, they have issued 150 units to job K. Now what will happen? For issue, what is left here? These units, which are the units left? This is left 300 plus 100, right? So we will be taking 10.8 plus 11. Clear? Divided by 2. So 10.9 is the rate at which you will issue. Clear? 1635. Leftover units are 100. And what is the value? That is 2725 minus 1635. Clear? Any doubts? So remember always one thing. When you are using the simple average, first thing, you do not have to consider the units when you are calculating the price. Right? When you are calculating the issue price, you do not have to consider the quantity. If you are considering the quantity, then you are applying weighted average, not simple average. Right? Second thing is, you have to consider in terms of quantity, you have to consider the FIFO method, that the units which are received first, you are issuing those units first. Right? So this is the value that is left with us, that is 1090. Now, he says the same question is to be done by the weighted average method also. Okay, there is no issue, sir. We'll do it by weighted average method also. So on March 1st, you have received 100 units. Clear? 10 rupees, 100. Closing balance, 100,000. So receipts. Now, 200 units, 10.2, 2040. Now, what is the balance here? 300 units at 3040. Absolutely no issues. Now when you have to issue on March 5, you have to issue 250 units. What will be the value that you will be considering now? Now you have to be very careful in considering the value. You have to use the weighted average method. right? So here, how will you calculate weighted average? 3040 divided by 300, right? 3040 divided by 300. See, this is the weighted average. Clear? Or in which way you can calculate? You can say 100 units are lying of 10 rupees plus 200 units are lying of 10.2 rupees divided by total number of units, that is 300. Right? So the remaining is 50 units at 507. This is 3040 minus 2533. Now, on March 7, you have received 200 units at 10.5, 2100, total 250 units. And this is 507 plus 2100, right? Then you have again received 300 units at 10.8, total 3240 value. And here total you have 550 units now. This is 2607 plus 3240. On March 13th, you are issuing 200 units. Now, how to apply this 200 units, sir? How the rate will be calculated? The rate will be calculated that on the previous date, previous date means on previous date, what is the value that is available divided by what is the quantity that is available, right? So 5847, this is the quantity, this is the value according to the quantity that is there, right? Divided by 550, that is 10.63. Right? Remaining is 350 units at the value, that is 5847 minus 2126. Now again you are issuing 200. Now again the value will remain same. Again the value will remain same, sir, because there is no purchase in between. Because there is no purchase, or even if you want to go for the previous date, here also if you will calculate 3721 divided by 350. 3721 divided by 350, it is 10.63. It is going to remain same, right? So 10.63, this is the value, remaining is 150 units, and this is 3721 minus 2126. On March 20th, you are again receiving 100 units at 11 rupees, 1100, total value 250, and this is 1595 plus receipt, that is 1100. Now, when you are issuing on 25th, you will see the previous date. Here, how you will calculate this rate? What is 2695? This is the value of the quantity divided by the quantity that will give you the value of 1 unit, that is 10.78. Any doubts? Clear? 10.78. So this is the value, and this is the closing value 1078, that is 2695 minus 1617. Right? So this is weighted average. In weighted average, what you have to remember is whenever you are issuing the quantity, you have to check the closing balance on the previous date and the closing quantity on the previous date. That will be your weighted average price. Right? That will be your weighted average price. So we are done with question number 5, doing it by simple average method as well as the weighted average method. We have done it by both the methods. Clear? The simple rules you know, right? That you have to record the receipts, you have to record the issue, and you have to calculate the balance. The only problem that you will get is when you are issuing the price at which you have to issue by different methods. One is the simple average, another one is the weighted average. This is where the confusion will be. LIFO, FIFO is very simple, sir. Last in, first out, and first in, first out, that is pretty simple. Isn't it? Okay, so we are moving on to question number 6 now. The stock of material held on 1/4/2015, that means this is the opening stock that is given to you, was 400 units at the rate of 50 per unit. The following receipts and issues were recorded. You are required to prepare the store's ledger account showing how the values of issues would be calculated under the base stock method, both through FIFO method and LIFO base being 100 units. Now, what is this base? What do you mean by the base stock method? Now he says that whatever the opening units are available, see these 400 units are the opening units. He says we will bifurcate into two parts. One is the 100 units, that is the base unit. Base unit means these units will always be there in your stock. It is a kind of emergency stock that you are keeping, that you are not going to touch upon this stock until and unless it is very much required. Otherwise, this stock is always going to be there. This is your base stock. This is your base unit that is always available with you. That is 100 units. The remaining, it is available at 50. The remaining 300 units are freely available at 50 only. You can utilize it, you can issue it as per the FIFO method and as per LIFO method. As per the method that is specified. Here he says you have to calculate it by FIFO method also and the LIFO method also, right? But you have to consider the base stock method. That means you have to keep a base of 100 units. That means these units you are not going to touch upon. You are not going to issue these units until and unless it is very much required. Clear? Any doubts? Let's see what are the transactions now. On 2nd of April, they have purchased 100 units at 55 per unit. So the first thing, whenever the opening stock is given, the first thing that you have to do is record opening stock. Forget about all the transactions. The first thing is record the opening stock, because this is one very common mistake, that you forget about the opening stock. You will record all the transactions and you will forget about the opening stock. See, on 1/4/2015, you have the opening stock. He has bifurcated the opening stock into two parts. One is 100 units at 50, 5,000, then 300 units at 50, 15,000. Now this 100 units, this is your base stock. This is your base stock which you don't have to touch upon, right? It will be utilized only in case of an emergency. Otherwise, you are not going to use it. After that, you are going to, let's do it by FIFO method first. He has done it by FIFO. Then on 2nd of April, purchased 100 units at 55. On 2nd of April, 100 units at 55, value 5,500. Now, how you will record the balance? Sir, 100, this is the base stock that is available. Then 300 units, then 100 units of this value of 55. Clear? Right? So this is how you are going to record. Then on 6th of April, they have issued 400 units. Now, this is interesting, sir. When you are going to issue 400 units, are you going to touch upon this 100? Are you going to touch upon this 100? No, sir. We are not going to touch upon. That means even when first in, first out, you will first issue from 300, right? 300 units at 50. Then the remaining will be issued from these 100 units, right? You are not going to touch upon that 100. That base stock is always there, right? So 100, this is the base stock that is left, right? So this is our base stock that is left. Then on 10th of April, what they have done is, we are done with this. On 10th of April, they have purchased 600 units at 55 per unit. Very simple. They have purchased 600 units at 55. So you will record 100 here. This is the base stock, always going to be there. 600 units additionally that you have purchased. On 13th of 4, you are issuing 400 units. Now be very careful. When you are issuing 400 units, you will issue from this value. You will issue from 600 units and the base stock you are not going to touch upon. Okay, so you will issue 400 at 55. So what is left? The balance stock is 100 units, the base stock plus 200 units at 55. Right? Now on 20th of April, purchased 500 units at rupees 65 per unit. Purchased 500 units at 65. Now what you are left with is three types of stock: 100 at 50, 200 at 55 and 500 at 65. After that, issued 600 units. Now, when you are going to issue 600 units, from where will you issue? First, you will utilize this and the remaining you will be issuing from this. The balance is 100 at 50, 100 at 65. Right? The rest of the method is pretty same as we have already. Then purchased 800 units, then issued 500, 200, purchased 500, issued 400, purchased 300. Now you can do it on FIFO and LIFO method, right? FIFO method, we are already almost done, right? The balance, the only thing that you remember is this base stock, right? The only thing that you need to be careful about is this base stock, sir. Rest, everything is easy. Right? You have to be only careful about this base stock. See, by the end, the base stock is there with you. Right? This is the base stock. And the rest, whatever you are purchasing, you will issue from the remaining purchases by FIFO method, and applying the same rules, you have to do it by LIFO method. Right? That is the last in, first out. Last in, first out, right? So we will not touch upon the base stock. That is the only rule that you people have to remember. Rest everything is same, rest everything is easy, right? That is why it is called as base stock method. If the base stock method is not given, then you can simply utilize those 100 units also. Then there is no need for bifurcation in the opening stock. If the base stock method is not given, you will directly write 400 units at 50, 20,000. Simple, as simple as that, right? So we are done with question illustration number 6 also. So we'll continue in the next lecture from illustration number 7. The same illustration by FIFO method, you have to do it with only, I think, one change is there. There is returns, how to treat the returns. That is the only thing that is to be considered in this question. Otherwise, rest everything is pretty simple. All these are very, very simple, right? So we will keep it to 30 minutes a lecture only, so that it is easy for you people to grasp, right? And you will get sufficient number of views for each of your lectures, right? So see you guys in the next lecture. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.